y'all can hear me, right? Y'all ready? Okay, so who in here owns a business? One person. Y'all own a business? I need y'all to be proud. Alright, so my business owners, this is for y'all. Just like Allison was saying, a lot of us make money, but we write it all off when it comes down to tax time. Some of us are hybrid entrepreneurs. What does that mean? That means we have a 9 to 5 and we own our business on the side. So we operate our business as a side hustle and not our main hustle. Or we're not even looking forward to getting our side hustle to be our main hustle or our full-time entrepreneurship journey, right? Make sense what I'm saying? Yeah. So we need to understand that in order for us to qualify for the purchase of home or to make any type of big investment or any type of big purchase, we need to show profitability, meaning that bottom line. If we know, everybody heard of a Schedule C if we're a business owner, right or wrong? Right, so our Schedule C goes on to our personal taxes, meaning we have to write down how much we made in this business minus all of our deductions. And we know we hear all the gurus always talking about, oh, you can write everything off. You have a home business, you have a home-based business, you work from home, you have a laptop, you have a bank account, and all of these things, right? And we're like, oh yeah, I do that. I work from home. I have a 1099 that comes from some type of income that I'm bringing in. I also have my Square receipts, I have my PayPal, I have Venmo, I might accept Cash App. So I have all this income coming in. It might be going to my personal account, it might be going to my business account. I don't know. When I get to the tax professional, I just give them all my paperwork and they just send me whatever my bill is, and they also tell me, okay, this is how much I'm getting back. One thing is a red flag. If you're always getting a refund back, that means you're in a negative. Make sense? You're not making money. If you're a business owner and you're getting a refund back, you're not making money. You're not showing your profitability. That is a big red flag when it comes down to you going to the closing table, because they're going to tell you wrote everything off, you might need what's called an amendment. What is an amendment? It's a change to your taxes. It means that I need to go back and claim some of that income that I wrote off, which is going to in turn make you have to, one, pay a tax professional, and two, probably pay the IRS. Make sense? Because you already, go ahead, Danielle. You have a question?
So you're talking about this for the business owner. When we file our taxes, we gotta tell the truth.
We do. But a lot of times we like, I'ma just give you what I made over here on Square because it's giving me enough for me to be satisfied with my refund. But then again, you go back to the closing table and your AGI, meaning your adjusted gross income, means you only made $10,000. What kind of house you think you could get for $10,000? Not none of these that we're about to go look at, right? So we have to think about longevity. What am I going to be able to do with this in the future? How much house can I afford with the little bit of money that I'm claiming? Right? You might have a catering company like Danielle, and you making money every single week consistently. You've been doing it for 2 years, you got your LLC, you got your banking in order, you're looking at your bookkeeping, and everything is in order. So now it's time for you to go to the closing table, and it's showing that you're in the red. But you come to me and I educate you and I say, Danielle, if you're really serious about getting into this house, we need to show profitability for 2 years. So that might mean that you might need to pay the IRS for 2 years. Then you can go back and continue to file and use all your deductions once you get where you want to be. Make sense? But we have to take that sacrifice and say, I want to be a homeowner, I need to make sure I put some money on the side, I'm making all this money, let me put something in the savings to say this is my pot to build my house. This is my pot for my closing. This is my pot for my tax preparation fees. This is my pot to pay the IRS. Make sense? So all those same pots that we got earlier from James, we put money in those buckets. Make sense? Versus us saying up here, I want to get a refund, and I'm going to use this refund to get my down payment. But your down payment is going to be on the shack. We don't want the shack. We want a mansion, right? I know I do. I don't know what's wrong. All right, so if we're looking for a mansion, then we need to make mansion money, right? What does mansion money look like? It doesn't mean that you have to make 6 figures. It doesn't mean that you have to make $999,000. It just means that you have to have consistent income going up every single year, right? And when it comes down to it, you're looking at it on paper, you might make 40 at your job, but you're looking for a $300,000 house. You only need to make about 30 more in your side hustle or your business. Make sense? But you have to show that. You can't make 30 more and write off the same 30 that you just made, because now you're only taking into consideration your W-2 job. We got that? So first point, like Danielle said, yes, we have to declare all our income. That's my first point, literally. Declare all accurate income, meaning if you have Square, if you have Stripe, if you have PayPal, if you have Cash App, consolidate those reports. But as a business owner, I'm gonna tell you, do not take Cash App anymore. If you have been taking it, stop today. Meaning, you need to go on social media, make a post and say, effective immediately, I will no longer be accepting Cash App. If you have Cash App, you have a debit card. So what I'm gonna do as a business owner, you send your invoice. Make sense? You have to collect your reports for yourself as the business owner. So when it comes down to you going to an accountant or you going to a tax professional, they can say, run your reports from January to December. Give me your expenses from January to December. And I can also tell you, this expense does not make sense for what you're trying to do in the future. Make sense? So you don't have to take off everything. You may qualify for all these deductions, don't get me wrong. But if you know that you're trying to make a purchase, it's not a good idea for you at that time. Make sense? The second point I want to make for y'all is make sure you separate your business from personal. That's big. A lot of people have business accounts, but nothing is going in. A lot of people have personal accounts, and all of their business money is going into their personal account. Right? So we have to make sure that we separate the two. Separating the two means that I know that I have my business account, I know that I have Stripe and PayPal and all that, but it's not set up the way it needs to be set up. So let's make sure that we're putting all our business transactions to go to our business account, so that when it comes down to us applying for grants, applying for loans, applying for any extra additional money that we can properly qualify for, that is going into the right account. I always tell people the good rule of thumb is 3 accounts: a savings account, an income account, and also an expense account. So that way, if you're applying for a loan or a grant, you can show them your income account. You have all your income going here in one space. Then you have all of your bills, all of your auto pay, all of that stuff coming out of a separate account that no one is seeing negatively affecting your account, going back and forth, going up and down. Make sense? And then you have your savings account, which is your reserve, rainy day, car troubles, deposits, a trip, your home down payment. All of those things is in your savings. Okay? So you should have that in your business, and you should also have that in your personal. So now you're never commingling funds because you got 6 accounts. Make sense? The third point I want to give to y'all is, if you own your business, I think they touched on it a little bit earlier, you have to own your business for at least 2 years. You got to have 2 years of consistent income. So if you've been working on a job for a whole year, and then in the middle, now they do have some gray areas where if they switch a job, it has to be like on the same level or something like that, but they have to have a letter saying
same field.
You leave it here, same field, you're starting here, and then, right. So definitely, if you own your business, make sure it's 2 years. If you switch jobs, make sure it's consistent in the same industry. You can't stay, I'm a truck driver, and now you turn over in your nurse. Can't do it. Make sense? Don't forget the budget, right? We always talking about, we want to own a home. We want to stop paying rent and throwing all our money away. But are you in a budget for that? Are you ready? Like she said, I don't know if I'm ready to commit to purchasing a home, because I know I might feel like YOLO. I see it, I want it, I buy it. Right? I might not feel like I can't do that if I have a mortgage. When you have a rent, you might could say, oh well, it's a data first, I'm gonna make it by the 5th. But when you have a mortgage, it's consistently coming out. That's one thing that's gonna be on auto pay. They're gonna hit you like that. Make sense? Y'all feel me? Okay. Set money aside for closing costs. That means your inspection, that means your new furniture. Some people say, I don't wanna go into my new home with my apartment furniture. Right? So some people say, I'm gonna move in and I'm gonna sleep on the floor until I can get my furniture. No, we wanna budget, we wanna save, we wanna prepare ourselves. So when we go in the furniture store, the same day we go to the clothing table. All right?
Hold on.
And
don't finance the furniture before you.
No, they gotta save for the furniture. We're not financing.
That will kill the
Or
deal.
don't buy a car. Don't buy a car before. The bottom line, I want to talk about the bottom line. Back to your taxes. We're looking at how much money we're making in income versus how much money we're spending on our expenses. Is your business profitable? We don't want to just fluff up the numbers and make it like you can't afford it, because you're going to be struggling in the end. They're not selling you a home to come back and take it. Make sense? We want you to stay in this home that you're applying for, this is your dream home, you done invited people over, you done had your family reunion and all of this stuff. We want you to stay in that home for years to come. So make sure that you can afford the home that you're looking to get. Be sure that you are prioritizing everything that comes along with this home. So that means your flood insurance, that means your HOA payments and you purchase in the new construction, that means utilities, anything that can fluctuate. So if you have cable and you know I'm not using cable, should I even have a cable bill? Or you gonna get stuck with a direct TV bill that you don't use? But anybody have any questions as it relates to taxes? Go ahead.
No, for real, listen, y'all, this is a true story. One day, listen, I love to be on Instagram at night, y'all have no idea. And one day, she was saying something about Texas, like everything she's saying right now. I felt so bad, I really wanted to share that with you. Because this was the exact same thing you was talking about in your life.
Mm-hmm.
And it also goes back to accountability.
Mm-hmm.
Like, I was joking when I was like, accountability part about homeownership. But sometimes, like, I just get weary with the rent part of it. And I be feeling like, can I really mortgage?
Yes. You could.
Car?
Here's the thing though, your mortgage is not gonna fluctuate, like your rent will fluctuate. Somebody else could buy that property that you living in, that you renting from, and it can make your rent go up 3 times the rent. And what you gonna have to do, you either gotta move up and put your family in an uproar, whereas you own this house, you don't have to move. Your mortgage is not gonna go up, it's gonna be locked in.
So from now on, you doing my taxes?
If y'all look in y'all folders, y'all should have a flyer from us. You can also, I need everybody to take out their phones if you don't already have your phone. Take out your phone, go to the App Store, and download my mobile app. It's called Carter Capital, PLLC. Carter, C-A-R-T-E-R, Capital, C-A-P-I-T-A-L, PLLC. The other thing I want you to do while you have your phone in your hand, while that's downloaded, I want y'all to make sure that you put our number in your phone, 855-446-5050, and you can text me any questions you have. I'm gonna say it again, 855-446-5050. And even if you went somewhere else to file your taxes, I can still help you. If you feel like you need a second look, if you feel like, hey, somebody wrote up all my stuff, I went back, that's your homework. Go look at your taxes. If you file somewhere else, look at it. Go through each page and say, okay, it's showing that I have a negative amount right here. If you look at your Schedule C, business owners, and you have parentheses around line 30, you're in a negative. That means you will not qualify for a home because they're going to either tell you need to amend your taxes and take this business off, or you need to amend your taxes and show profitability.
That's line 30.
Line 30. Yes, ma'am. Any other questions?
I have a question. I have a 9-to-5 job, but also as a nurse, I do like travel, nursing, and agency work. And we get paid through a 1099. Should I be like an LLC and follow that?
You don't necessarily have to have a LLC because the 1099 is covering you. But if you are making money on top of the 1099, then yes, you should LLC. But you definitely, or when you file 1099, it's connected to a Schedule C. So you basically,
A question.
go ahead, Tasha.
This person, he made $72,000
Mhm.
for the year, right? But he don't have a dependent.
Mhm.
And the tax person I went to, they was like, well, he would have to pay back.
Most likely. So
That's
what
what
type of job is it? Is it a W-2 or he's
I W-2. Is it a
Did he pay taxes on the $72,000?
If he's W-2, they pay taxes on it.
No.
No, they can do that.
All W-2s don't pay taxes. So we look at W-2s like this. When you look at your W-2 in box 1, that is the amount of income. That's gonna be the $72,000. Box 2 should be at least $8,000, somewhere around there, of how much you paid in order for him to get a refund back. Otherwise, what some people would do is try to add a Schedule C on there to try to offset that $72,000. But if he does not own a business, he needs to just pay what his tax is.
And his
worth paying in the end, I tell everyone.
Right, so you
If
can
you're
use
trying to
this
buy a
AGI.
house, to pay on the sound for 2 years, cause that's what they're looking for, please do it, it's worth it. And I had to learn that the whole way too, because I'm trying to buy investment properties and talking to Ms. Drake, and she said, look, I want you to do it, but I don't need you to write off everything, cause I know this will be, praise God, y'all, this will be my first year that I am paying back taxes. I'm used to my little return too. But, you know, I'm kinda getting my little feet wet, so it's like, for me to have to pay back, I'm like, But when I look at the value at the end.
That's a great thing.
I am a homeowner now, but now I wanna invest in properties, whether I'm a fix and flip, and we're gonna talk about that. So yes, now I have to pay back, I have to, because I want my AGI to look a certain way, for when I'm ready to get approved.
Yes.
The money is there, the credit is there, I don't have no problems, I don't have to wait, you know, but having the connections and the relationships with these type of people will all get y'all there. That's why we kind of did this for y'all to know that. So it's worth it, pay it.
I have one more question. I'm sorry.
You good, no, ask, that's what you here for, right? You here for that.
So I've been on this job for 2 years now, and they haven't been taking federal taxes out of my own work checks. Something was wrong with the system. They said I had picked exempt, but I knew I wasn't exempt. So when I did my taxes for the last 2 years, I did add a business to it, but I said the business was a loss. So would that affect me?
It would. So just like we was just saying earlier, if your business, if you look on your page, the business that you claim, it's probably gonna have parentheses around it because you took the loss to say you're getting a refund, right? You have dependents, of course. And so you basically said, I know I didn't pay taxes, but it wasn't my fault, but they couldn't fix that at that point, right? So you need to, one, go fix your W-4 form. And
I did so many times. So what they said they was gonna do is take me out the system and put me back in the system. So the check that I get Friday, hope is right.
They take care of it.
Yeah.
Okay, no problem. And if you need help filling out the W-4 form again, because it did change in 2020. So it's not the same as people just add A through I and, you know, get what they're supposed to take out. It's like you gotta multiply the dependents minus this or whatever. So you can call me if you need help with it.
Okay, the 855?
Or you can text that number too.
Okay.
It comes straight to my cell. Next question. Anybody else have a question?
I don't really have a question, I just want to say something.
Go ahead.
All I want to say is, if you make money, you might have to pay money back. If you make money, you gotta pay back, like taxes and
Go
everything.
ahead.
Oh, listen, because I'm here trying to intake all this information, I'm joking and stuff, but like I can really see myself like trying to educate our audience, but I'm trying to see like, did y'all learn all this over time, just?
Both trial and error and experience. So like I've been doing taxes for 10 years. I've been owning quarter capital for 10 years. And so just over time, seeing growth and also working with people side by side, working with realtors and getting over 50 people into purchasing their own home. Seeing the back and forth that they had to get, writing them letters that they had to say, oh, I got a gift for this amount of money. Letting them know how to spend. Because guess what? When they pull your bank statements and they pull your tax returns and they pull your work history, they're going to want proof of all of this. You can't just show up with it. It's not like old times. Everything is database. Everything is database. So I can make you a letter, but if your bank account is not saying what your letter is saying, it's not going to fly for their underwriting. Make sense? So I mean, for me, I know experience taught me a lot. Working with different people, seeing different scenarios, and also working with realtors. Sometimes I have realtors call me and say, hey, this person makes the money, their taxes need to look like X, Y, Z. And I'll say, okay, so the fee is gonna be this is what they're gonna owe the IRS, this is where the AGI is before we even submit to the IRS. So it's just trial and error and helping that person get to the closing table, which is the ultimate goal. But sometimes that IRS bill is hefty. So just be prepared to make sure you're paying that IRS bill or making a payment arrangement, but that can also hold you back. So keep in mind, if you're making money, you need to be saving for a rainy day. That's why I say have your different accounts to separate everything. It's a mindset shift. So if you're used to getting a refund, you're gonna be like, man, I still have years on these dependents, right? That's the main thing people be thinking about. It's like, I still have years. In a few years, I'm not gonna be able to claim this person or get the same amount of credits or money that I would get for this person. So I wanna get it all while I can get it now. I can buy a house later. But that's not the right mentality to have if you know that you're making enough money to sustain the lifestyle that you're looking for. So go ahead and pay the IRS, pay the fee.
Question. So if I do make a lot of money and my bill for the IRS is about 20 grand, do I have to pay that all at one time?
No, you do not. So what's gonna happen is I'll file your taxes for you, and the IRS is gonna send you a letter. From that letter, it's gonna give you opportunity to give them a call and start making payment arrangements, or you can make direct debit from, directly from that letter.
So, what he said,
Mm.
so, alright, say you had made my taxes for me, right? Do that stop me from qualifying for a home?
No, you can go to the realtor, you can go to Allison, you can go to DHI Mortgage with your amended tax return, which is gonna be your 1040X.
Okay.
And on top of that, so basically, let's say we did formulate a payment plan with IRS. Basically, what we would do on the lending side, we view it as almost as if you're taking on a new debt, essentially. So basically, let's say you owe $5,000 and this payment plan is $50 a month. We would essentially treat it as if it's just a brand new debt that you're adding, and we would only count that $50 against you towards that debt to income ratio.
That's good.
Yep.
Any other questions? All right, so just follow me on Instagram. I am Drika M. Carter, and my company is Carter Capital. We are the only 24-hour loan development firm and institute, and we assist you with tax preparation, bookkeeping, business taxes, personal taxes, credit repair, and business credit foundation as well. So if y'all need help, reach out to me. I am open 24 hours. Thank y'all.